A good morning to a good morning to you all. Let me hope everyone is okay. I would like to welcome you all to our Zoom meeting today. And our theme for the session is direct coffee trade versus commercial trading models. The first item on our agenda is self-introduction. We shall introduce ourselves. First, the moderators, the guest speakers will also introduce themselves and the rest of the participants. It will be a quick one. We shan't spend a lot of time on that. So I think I'll go first. Yes, so my name is Julia Saz, and I'm joining all the way from Rakai District, that's southern Uganda, East Africa. I'm the general manager of a coffee agribusiness company. It's called Opportunity Mania Transformation Services Limited. To briefly tell you about what we do, we have three business lines. We have a coffee nursery bed project where we raise improved coffee seedlings for farmers. The KR varieties, Chituza Robusta, that's KR1, 3 up to 7. We have also introduced the new KR lines, that is the KR8, 9, and 10. We also have a processing facility whereby we hull dry coffee cherries. You know, our region, we grow more of Robusta coffee. So we hull the dry coffee cherries to fair average quality. Then also we have a value addition component in the company whereby we add value to the green coffee beans to roasted ground coffee. Thank you so much. So I would love also to introduce Elovina. Oh, you can take up the microphone. Thank you.
Thank you so much, Julius. I'm Navtoa Ovina Lilian, a production manager for Karamogo Women Empowerment that was founded in 2015, and it's located in Sironko district and eastern part of Uganda. We do value addition to Arabica coffee from farm to cup process. We also work with smallholder coffee farmers. We train them on pre and post harvest handling, and we also source coffee from them. Thank you.
Great. So would love also to introduce Professor Grabs, who will also handle the microphone to Mr. Vincent Mulindwa. Thank you.
All right, so yes, thank you very much for having me, and it's a pleasure to be here. My name is Janina. I am Associate Professor of Sustainability Research at the University of Basel in Switzerland. And as I mentioned to your colleagues, I'm probably the one in the room with the least coffee experience, at least when it comes to Uganda, but I have researched it for a while. So I'm going to be speaking more from a researcher perspective. My focus in my research has been especially sustainability governance in global coffee value chains, but also power dynamics in the chain. And so I'll be hoping to have a conversation and also, learn from you all and look forward to our conversation.
So my name is Vincent Mulindwa from GERUGA Coffee. We'll talk about German, and we have another company in Uganda by the name GERUGA Export Limited. We started these two companies with the philosophy of being direct traders, whereby our business communication goes direct from farmer to the cup, up to the end of the cup, up to the meaning the drink of the coffee here in Germany. So originally, I was born in Uganda. Probably one may need also to know that. And in the process of my studies, I achieved a scholarship to come here to Germany and start mechanical engineering, which I accomplished some time back, and started to work with the automotive. So with my children, later on came an idea to start this coffee business because they saw the potential of helping people in Uganda, especially the peasants who have been milked with these middle class traders. And the idea came to be direct traders, whereby We handle the whole subject directly from the farmer up to the consumer here in Germany. So in the meantime, we deal with two components, raw coffee and roasted coffee, as we have a roasting facilities here in Germany since 2023. So that's all from my side.
Thank you so much, Mr. Vincent Mulindwa, and also our another guest speaker, Professor Grabs, for your brief introduction. We shall use a few minutes to introduce the Universe staff and also the rest of the participants. Thank you. Oh, Sam, you can go first. Thank you.
Yes, thank you so much, moderator. My name is Samuel Magezi, and I'm joining you from Kampala, Uganda, at UNIFA office. I'm delighted to be part of this meeting to accompany all participants on the side of Uganda to see that we have a coffee exchange. Thank you.
Atman?
Yes. Yeah, thank you so much, Julius. Yes, my name is Hatwen Odur, and yes, I work with the Young Farmers Federation of Uganda. I'm happy to be here. Thank you.
Thank you so much, UNIFA staff. I think we shall also introduce the rest of the participants. Joel, the mic is on your end. Joel, are you there?
A suggestion, Julius. Just looking at the time, I think participants can introduce themselves quickly when they pose a question. Is that okay?
Oh, that's better. Okay. I think let's jump. Oh, Joel, maybe Joel. Oh, Joel is off. All right. So let's jump in straight to the discussion and the presentations. We're going to welcome Professor Grabs to speak about commercial trading. Thank you so much.
Sure. Okay, let me see. I'll share my screen. And you should be able to see my the full presentation. Is that correct now?
Yes, we do. We can see your screen.
So let me start, and I'll start from the beginning because I'm not sure where exactly your conversations about coffee have led you so far. So I'll start with the global trade flows of coffee beans. So as many of you will probably know, we have a number of major producing origins, especially Brazil, Vietnam, Colombia, who are some of the major players, but then also players that are pretty large in Africa, such as Uganda and also Ethiopia, and players that are rather large in Asia as well, like Indonesia. And so Brazil is by far and large the largest player in the global coffee trade, and the taking up around 2.2 million bags. Billion tons, and the major consumption origins still tend to be the United States, then the European Union, especially Germany is a major importer and then also re-exporter of coffee. Italy is a major player as well. And then we have other smaller players. And all of this coffee that is being traded through these global channels can be traded via three main pathways, or really sort of like two and a half. So, and I was asked to talk mainly today about this mainstream commercial pathway, right? So, which focuses on rather homogeneous coffee that is traded through standardized ways in bulk, that is aimed especially for roaster focused blends, right? So where roasters, especially in the global north, have their specific taste blends that they sell to consumers, but that they can build out of a variety of origins. And so for most of those blends, these are not actually just focused on one origin, but they build these around exchangeability such that they can also look into where specific origins are more cheaper or more available depending year to year. And so the way that they get to this coffee is mainly via trading companies, so exporters obviously in the producing country, importers in the importing countries. Obviously also some of the origin countries have been our major coffee consumers. So maybe we shouldn't use the language producing and consuming countries, but the origin countries and the importing countries. So from my knowledge, there are some roasters that also buy basically FOB. We'll learn what FOB means. This is free on board, meaning that they buy directly the coffee that is on the ship, and then they take care of all of the shipping all the way to their production sites. But the majority, these are mainly the biggest roasters. The majority of roasters still rely on import-export companies to basically take care of the shipping, and then they will buy the coffee in the country where their roasting operations are located. And so we'll talk a bit today about how the futures markets plays into pricing, plays into de-risking, so hedging the price of these contracts, and how standardization comes into play. And then we also have certified coffee, specifically with sustainability certifications that can be traded two ways. The majority nowadays, because it has become quite mainstreamed, is also traded along those same lines. So trading companies will segregate certified lots from non-certified lots, but basically use the same systems, right? And use the same type of contracting and just add the price premiums that are associated with the certifications to the contracting as is. Although we also have some smaller players, especially sort of in the fair trade market, that try to do a little bit more of the direct trade or interact more directly with cooperatives. So it kind of depends on the certification system. And it also depends on the certification system, how the eventual pricing model will work. So for instance, Fair Trade International, or the fair trade certifications generally, have a minimum price in addition to a set premium price. So here the contracts work a bit differently because the price can never go below the set minimum price of a fair trade. And then what we'll also hear about later today, less from me than from our colleague, is specialty coffee, right? Which is set apart via its quality characteristics, which are determined by cupping, so by tasting the coffee, and there's standardized protocols on how to give certain coffees a certain point score, and along the lines of this point score, anything that's higher than 85 out of 100 points will be considered specialty, and the higher you go on that end, the more specialty you go, the more unique your coffee becomes, right? Because then it has a very specific recognition for its quality. It may also have a specific flavor profile that is very specific to the varieties that one grows, or the specific soil conditions in a particular growing region. And here is also quite interesting. There's historically, even specialty coffees still use the same pricing model that we'll now explain using the futures market, but there's also increasing efforts to try to move away from this, arguing that specialty coffee is actually so different from this commercial standardized coffee that it doesn't make sense to use a reference to the commercial market as a set base. And so there's some efforts now to try to gather more information on how different types of specialty roasters are pricing their coffee, what is sort of a good base price for specific types of quality segments, in order to sort of move away from the linkage to the mainstream commodity market. And we also have Cup of Excellence competition. So these are competitions where different types of producers send in samples of their high quality coffee, which are then scored by an expert panel. And the ones that receive the highest scores, they're auctioned off in a specific online process. And so here, this is where we can really get the highest coffee prices ever, but they would tend to be for very small lots, right? Very small amounts of coffee, because here the attraction is really coming from the rarity, the exclusivity of that particular coffee. All right. But so now focusing on, oh, and what I meant to say also, if anybody has a question throughout this presentation, please just call in. So I'm trying to look at the camera, so I won't be looking at all of the images, but just unmute yourself and ask if you have a comprehensive question, or else we can also take questions afterwards. All right. My assumption is that many of these participants in the room know this better than me, but just for completeness, I also wanted to mention that Uganda, as I think I already mentioned, is the leading coffee exporter in Africa. It only just surpassed Ethiopia. So Ethiopia still is the largest producer, but they tend to consume a lot of their coffee internally, up to half of the entire production. And so Uganda has been growing in exports over the years very impressively. Most of its exports are going to the European Union, so around 2/3 or over 2/3, with Italy being a major player. Italy buying between 40–45% of all coffee. So it's interesting to think about the Ugandan market being quite dependent on one single roasting destination, right? And what that means in terms of also strategies. And I'll talk a little bit later about the EU deforestation regulation as well, which obviously has a big impact for Uganda because of its reliance on the European market, more so maybe than other origins. Germany also, we're here in this German-Ugandan collaboration, but a smaller importer with around 10% of market share. All right, so the futures market. In order to understand commercial commodity trade in coffee, you really need to understand the role of the futures market. And so this is a market that's on the stock exchanges. In particular case of coffee, it's either in New York or in London, depending on where, what type of coffee you're trading. And a futures contract represents an agreement to sell or to buy a set amount of product of a certain quality range as a set time in the future. So it's basically a promise that you make into the future that you say, by December this year, I promise you that I will buy a container full of coffee at this price, at the price that I'm now sort of locking in. Well, actually at the price that the contract will be at. And so what is specified in the futures contract? In the iced coffee futures, this is the Arabica futures contract. What people agree on is that they will buy, one futures contract represents 37,500 pounds of washed Arabica coffee, so around 17,000 kilos. There's contracts for 5 different delivery times over the year: March, May, July, September, and December. And there's also quality specification. So whatever is in a C futures contract is basically like a good quality green washed Arabica. So there's quality characteristics regarding the defaults, regarding the defects, the screen size, the moisture. It's basically just like I was reading an account that's like, it's like your standard hamburger, like very standard quality of the coffee. And in the futures contract, it's also specified where this type of coffee could come from, right? And this is in relation to the fact that different coffee origins tend to grow different types of Arabica coffee that are considered to be slightly higher or lower quality as compared to what this standard quality reference in the C futures refers to. And so what will happen is that for each of the 20 to 30 deliverable origins, there's also going to be a standardized differential. So that goes above or below this like standardized futures price. Saying that, for instance, if you deliver Colombian coffee in this contract, then there is going to be a positive differential because Colombian coffee is a bit more valuable than whatever sort of like the mainstream definition is here. But if you deliver Brazilian coffee, you would have a discount because it's a little bit worse than what the standard quality is. And the futures contract also specifies delivery locations. And so for Arabica coffee, which is traded at the New York Stock Exchange, those delivery possibilities are all within the US. So New York, New Orleans, Houston, and Miami. And so the first thing to know is that you can't actually use the futures market to buy physical coffee. So if I purchase a futures contract and I hold on to it, then I have committed to be buying this particular shipment of coffee under the specified delivery location, right? But only around 1% of all of those contracts actually go through. So, but I would have this agreement that I buy this, and somebody else will have made the agreement to sell this particular lot of coffee. And so this is important at the price that it is when this contract expires. So when the futures contract that I buy can no longer be sold. So I've held on to this contract up to the point where we're almost at delivery. It's around sort of like 3 to 4 weeks ahead. And then I say, okay, I have committed to this, right?
Okay. Sorry, can I ask a question here?
Yes.
Yeah, but what's happening with all the rest? Like, how are those contracts dissolved? Like, if it's only 1% that the delivery is made, like, I have to sell it to someone. But if it reached a point where nobody wants it because nobody really wants to get the physical coffee, so I wonder, like, yeah, what happens with those futures?
Yeah, we'll get to that point. So, very good question. What happens with the 99% of the other contracts, right? We'll hold on just a second because we'll get to this point. So just to say, because I know that Uganda also produces and trades a lot of Robusta, I also just wanted to point out the difference between the New York and the London futures markets, right? And so it's also interesting to see if we're looking at how these futures prices how the coffee prices are moving, that they're actually in very different specifications, right? So that the Arabica market, what we talk about also then when we talk about pricing, we usually talk about cents per pound of coffee, and the unit of the contract is these 37,500 pounds. Whereas the Robusta coffee, they work in metric tons, so 22,000 pounds, and they price it at dollars per ton. And so these are two separate markets where two separate types of contracts are being traded. And so also if you wanted to sell Robusta or buy Robusta, you do it on the London exchange, and so you would have EU ports that are the potential delivery ports. So why doesn't everybody just buy the coffee via the futures market? So we have this statement that 1% of all contracts go through. Why don't more contracts go through? And here's where I would like a little bit of audience participation. Why doesn't everybody just use the futures market to buy all of their coffee? Who has an idea of what sort of some of the limitations might be?
Professor, don't you think the price volatility, the prices keep fluctuating, so that can really consume a lot of your capital?
Yes.
Thank you.
So if you were just to hold on to this futures contract, right, you commit to buying or selling at whatever the price will be once the contract expires. So that's very good. There's price volatility. You don't actually know what you're going to be paying at the end. What else? Anybody else have another idea? So we already, yeah?
Mercy, you wanted to share something?
I heard Abias. Abias wanted to come in. Professor, you can proceed. Thank you.
I'll proceed. Okay. So we already heard, I already mentioned, right, that if you are buying, let's move our mind again towards Arabica. If you want to buy Arabica coffee on the New York Stock Exchange, you can only take delivery in the US. But maybe I'm a roaster that wants to buy Arabica and ship it to Europe. Then it would be really inconvenient to first take it into delivery in the US and then ship it all the way over to Europe, right? Also, I may want a different type of coffee, or I may actually care about what cooperative I'm buying from, right? So if I buy this futures contract and I buy the coffee that's in this, because of this standardization, I don't actually know what exactly I'm going to get, because anybody could ship me any type of coffee from any origin that is within those deliverable origins. And then the only thing that we've agreed on is if I get the Brazilian coffee, I'll buy it at a discount. But if I get the Colombian coffee, I buy it at a differential, the positive differential. But in the end, if I'm a roaster, I have a particular blend. I know what I want. I want this Colombian at this quality level, right? So in that sense, for many actors, having this as a delivery service of coffee doesn't actually work that well. But what is the benefit of having a uniform, universal market for all Arabica or for all Robusta coffee? What is the advantage of it?
You can compete well as far as prices are concerned.
Exactly. You have price discovery happening because everybody is working within sort of a standardized understanding of how much Arabica is out there in the world, how much Arabica is wanted in the world. We can discover the supply and demand very, very agilely, right? And so what now people in the commercial trading world have come up with is to take advantage of this price discovery mechanism while having the specifications of their of the physical trade, right? That they can link themselves to particular buyers via using an instrument that's called hedging. And so here is another question, and this relates to this question of what happens with the 99% of the contracts. Because what happens if I buy a C futures contract for December delivery, and then I sell another C futures contract for December delivery? If I do both of those things at the same time, what happens?
Yeah, it equals each other out.
They equal each other out. Nothing happens. I just promised myself that I would buy and sell to myself simultaneously a shipment of coffee, so nothing happens, right? So if they cancel each other out, what you can do when hedging is link your physical coffee contracts and actual physical purchasing to the futures market. And this allows you to reduce your price risk because you can maintain, you can basically lock in the price that you want at a specific point in time. And so I'll explain to you how this works. And I always have to work through this myself because it's like the intuition is not super clear, but we'll work through this together. So the intuition is, right, that let's put ourselves into the mind of a roaster. It works equally, but the other way around for somebody who is selling coffee as a trader. So if I am a roaster and I buy a physical coffee contract and I link that physical coffee contract to the C price, so to the price of the coffee in the futures market. And this is an important if, right? All of the vast majority of commercial coffee contracts now work with this price to be fixed contract. So this means that what I say is I talk to my particular exporter, to my particular counterpart in Uganda, and I say, we agree that you will sell me this particular type of coffee from these particular farms with these particular characteristics, and this can include, for instance, also certification in certain cases, but also certain quality characteristics that are more specific than what the futures market does. And we say, what we are agreeing on initially is only the differential. That is the premium, the surplus that, or the discount that this particular coffee will be running, will be adding on top of whatever the futures price is for delivery of the time period that we agree on. So basically what we both say is, okay, we agree that I agree that I will buy coffee from you in December at whatever the futures price is once that December contract expires, right? Like once it's basically set, plus whatever, 20 cents per pound, if we're talking about Arabica. And then again, in Robusta, we talk about dollars per metric ton. So that would be the differential which we agree on. But we both agree that like whatever the price will be, we will see, right? Like, let's see what the demand and supply characteristics, how they play out at this particular point. But this for me incurs risk because this is again the same way as if I was buying the coffee on the futures market. I don't know where it'll be. I don't know how much, like what I actually want. And so what I can do now, this is sort of like at a point where there's still a couple of months to go until this coffee is being delivered, is to say, okay, now I see that today's price looks good for me. I want today's price. So I buy a futures contract in addition to the physical contract that I just have. So now I've committed to buying the physical coffee from my Ugandan supplier, and I agreed to also buy a lot of coffee on the futures market, which kind of sounds crazy, right? Like now I have two, I only need one. But what happens is that at the point just before the futures market expires, what I can do is that I also sell a futures contract before this contract can no longer be traded, which will be then at whatever the price is that basically the futures market has sort of like come to. So in November, if we're talking about December delivery, I will sell this futures contract that I bought, and it'll be at a different price from what I originally expected. But what then this means is that I'm making some form of cost of benefit or loss on this futures market, which cancels out the risk that I would have made on the physical. So let me talk you through this in order to explain this better. So first of all, hedging is really important because we see, as Julius already mentioned, that price volatility in coffee is crazy, and it's been getting crazier in the last years because especially there's been climate-related shocks in Brazil and Vietnam and in Arabica, but also Robusta is also, prices are rising, but also becoming very volatile. So this hedging function is super important. But let's look at this example. So again, we're talking from the point of a German roaster wants to buy, let's say, 10 containers of washed Arabica. Let's talk about this in the case of Colombian coffee. So they now say, okay, I talk to somebody in Colombia. We have this contract of the C price plus the differential. The exporter will invoice me whatever the price is at the reference time, right? But today the C price is, let's say, at 180 cents per pound, which for me is a good price. I want to lock in this price, but prices may rise. So I don't want to pay more than 180. So now as a roaster, I buy another futures contract, or in this case, 10 futures contracts to come up with the amount of coffee that I need physically for delivery in 3 months' time. And then in the future, I sell it just before taking future delivery, and I buy the actual coffee in the physical market. And now let's talk through 2 scenarios. So if in 3 months' time, the market jumps to 200 cents per pound, that's 20 cents more than I wanted to lock in, right? So as the physical coffee, I will need to pay 200 cents per pound because that's the reference price. So it's 20 cents more than I wanted. I bought a futures contract at 180 cents, and now I'm selling it at 200 cents. So I'm actually making 20 cents per pound of a profit on that futures contract, right? So I bought one, I sold one, I bought it cheaper than I sell it for. And so my benefit, my win on the futures market cancels out the loss that I'm making in the physical market because I have to now buy it at a higher price than I anticipated. If prices fall, so if the market drops to 160 cents per pound, now, you know, I could have bought it at cheaper, technically, if I had just like let the contract run its course. But because I bought the futures contract as well at 180, I have to sell it at 160. I'm making a loss of 20 cents per pound on the futures market. I'm making this, which cancels out my gain in the physical market, right? So in the physical one, now I'm selling it, I'm buying it at 160 rather than 180, but this is canceled out by the futures price. So what in the end happens is that either scenario, the price that I finally will have paid for the physical coffee is 180, right? So I've locked in this price. I've sort of committed to this price. I can't take advantage of the market falling, but I also don't have to, I'm not affected by the market rising because either way, my hedging on the futures market cancels out whatever the price change is in the physical market. Is this clear? It's a little involved, but maybe we take a moment here to digest this.
To me, it's much more clearer. I really tried to like watch so many videos, and but this one was a very good explanation. Thank you so much. I just don't get like who would buy a future just before like the delivery has to be closed? Is this always possible?
Yes, so good question, right? So in the end, because then you're sort of seeing there's like, how do I put this? As so most people don't all buy 3 months ahead of time and they hang on to the futures all the way before delivery, right? So the futures market is a very, very fluid market. And so what happens is that as you near the delivery date, the difference between what's happening in the real world on the physical market and on the futures price, they sort of start to converge. So basically the idea would be that there's trading happening all the time, and who gives what we call liquidity to this market basically are speculators as well, that will make small changes, like they take into account more risk because they think, okay, maybe there's going to be more risk happening. So because also you would say, if everybody thinks that the market is going to go up, who would be sort of like taking the counter position, right? If everybody kind of expects that prices will be rising, then who would be selling now and buying later in order to like lose money? But usually we have a lot of short-term speculators that basically will take the counter position on a lot of these positions in order to make short-term profits. And this is also opening up sort of this question on, is it good to have speculators in commodity markets? Because most actors don't want additional volatility, but the speculators add the liquidity that they're always offering sort of a counter position to what people in the physical market want to do. And so, but also, so the risk of taking or buying a futures market as it comes closer to the delivery date will be smaller because already the prices are converging, if that makes sense. So we're sort of, they're then making smaller gains or losses compared to the physical market as it comes closer to the due date. And also the majority of, because of this convergence, my understanding is also that the vast majority of actors don't wait until the very last second before the contract expires to do that final trading, but there's sort of, the trading is happening all the way up until the due date, if that makes sense, right? Because in the end, there's little to be gained, and there's also risk that, like, at some point, right, if you miss the due date, then you're sitting on this contract that you have to buy or sell, you don't want to. And so there's actually like some funny examples happening where people in other commodity markets, they just had to now all of a sudden ship, like, I don't know, wheat to somewhere, but they didn't have wheat, and it was just like a whole disaster. So in the end, there's sort of some convergence happening. All right.
One question, please.
Yes.
We are talking about these speculations and this long period of 3 months and ahead, but we haven't integrated the problem of foreign exchange. For instance, when we are to divert the dollar or euro to Uganda shilling, those are things which vary day to day. Are they also integrated in this philosophy?
You tee up my next slide perfectly, which is that there are non-hedged risks that you cannot hedge via the futures market. So those include things, right, that are not linked to the futures price, which, for instance, include foreign exchange movements, right? So those coffees, and my understanding is that both the Arabica and the Robusta, they're all priced in dollars. And so if your currency changes against this, you still have to pay and make the contract in dollars. So you can't really hedge against this via the futures contract. There's also other things that you can't really hedge against with the futures market. So differential changes. So we talked about that most coffee is priced at this C price, or like the futures price plus or minus a differential. But also, let me show you, differentials change over time quite a bit as well, depending on the demand and supply of the local market, right? So if a lot of people want, let's say, this Colombian coffee, but there's losses in the harvest, then the differential will rise because it becomes more special to have this. And so if you are locking in a particular differential with your supplier also, in the case of Uganda would be similar, you can't really hedge against changes in these prices of the thing that's on top of the seed price. Another thing that's quite important and that is difficult to hedge against, at least via the futures market, is freight and insurance changes. So most coffee contracts, if like you make them, they also specify who is actually in charge of the shipping, right? And so you have a couple of options. You can have, and these are called delivery terms or Incoterms. And so one option would be free on board, FOB. So this is basically the exporter puts the coffee on a ship, and then the rest is your business, right? Then the buyer has to arrange the freight. Then you have CIF, cost, insurance, and freight. So you cover the insurance and the freight, or CFR, which is just the freight. Or you could also have EXW, FCA, which would be, I actually don't even put it on the ship. I just put it into the warehouse in country. So you're responsible for putting it on the ship. And so depending on what is in the contract, who is responsible for the freight, for the shipping, if you have shipping disruptions like we had, right, in the pandemic period in 2021, when the containers were all over the place and it was really difficult to ship, then that kind of risk still gets stuck with whoever takes on the responsibility of shipping. And you also, the final thing that you can't really hedge against is quality variation. So let's say you agree on a certain type of quality and then you don't actually get what you were promised because, or the supplier just can't achieve what was promised, then there's still a little bit of an open box and like, you know, of open question, what happens, right? Like, do you then agree on different prices, or do you reject the shipment entirely? What happens with this? So there's also still some risk attached to that. Yeah. So this is a little bit of a mock-up of these sales contracts that you can see all of the things that need to be specified in this commercial trade. Again, the quantity, the delivery terms, the shipment period. There's also then inspections and payment terms, etc. So there's quite a lot of things to take into account. All right, so maybe I go through a little bit more fast. Who hedges on the C market? So just the Arabica C futures market, I got that from the New York Stock Exchange. They trade 7 times the world's coffee production annually, right? So there's a lot of contracts that sort of go back and forth. There's people that take long positions, which means they buy futures contracts, right? I have sort of like, I now own something that I need to get rid of. And another term is like the people who are selling futures, they're short, like, so they're short in a short position because they sold something that they don't really own, and then they have to get it back somehow, right? And so usually we have the major players on the market, exporters and traders, who are usually in short positions because, right, so they're selling coffee on the mainstream market. They also have to sell the futures in order to hedge. Roasters or importers would be in long positions. They're buying on the physical market, so they also have to buy on the futures market in order to hedge. There's some producer co-ops that have gotten into hedging as well, but they tend to be the large, like quite powerful ones, right? So the Coffee Growers Federation of Colombia, some Brazilian co-ops hedge, but many times producers are not yet as present on these markets, and I'll talk about why in a second. And then this is something that we mentioned before, right? There's a lot of investment funds and speculators that take either long or short positions depending on where they want to take risks and how they're seeing the market play out. And so they're the ones that also provide liquidity. There's some of the ones that are doing a lot of short selling, right? Sort of like buying, like the day trading, they buy and sell sort of in very short increments. So they're available to offer up positions depending on a particular time. And we also have brokers or banks that basically act on behalf of their clients, right? So many times individuals, it's hard to actually get onto the futures markets. You need to go through an intermediary like a bank. And so
Professor, I'm just having a question. Just a little, sorry to cut you short.
no.
For the matters of time, we have a second guest speaker coming in. I don't know if the second speaker is willing to offer some more time to Professor Grabs. Vincent, what's this about that? Or maybe we could
Yeah, I
open.
think it is interesting. She can move on. Okay.
Oh, she can move
But
on.
I'll be quick. Apologies for running
Okay,
over.
thank you. Thank you.
So why don't more producers use the futures market if it's so important to hedge for price risk, right? You need to have access, again, via a bank. You also need to, every time that you use the futures market, you buy or you sell, you need to put up collateral. Like you need to put up a certain amount of money to, like that sort of like solidifies your promise that you will actually follow through on this contract. And in addition to the initial collateral, if the market moves, you may have to add margin. So what we call margin calls. So if the market moves into one direction or another, you might need to like offer up even more money in order to support your promise that you will sell at a particular point in time, or that you're willing to buy at a particular point in time. So it requires a lot of capital. And sort of like cash flow previous to the physical coffee sales, right? Which is oftentimes quite difficult for producers to manage. And so this means that in these very volatile markets, the vast majority of the actors in the value chain, especially the traders and the roasters, are hedging their risk. They're sort of reducing their price risk, but most producers are just exposed to the price risk, right? Okay, very shortly, I wanted to also talk about what happens locally. So on the Ugandan side, and you all will know this better than me, we have quite a liberalized coffee market, right? So in the way this trading structure basically then flows all the way through down to producer co-ops or aggregators, where any type of company is allowed to buy and sell. And we actually have here the major trading companies. Most of those are international trading companies that are the largest buyers on the Ugandan market. So it's a very liberalized, very competitive sector. And for instance, UGA Coffee, it's Sukafina, they're one of the big players, but then we also have these other larger multinational trading firms like Louis Dreyfus or Olam, or Ecom, Neumann Kaffee Gruppe, that are major players. But we can also see that different national markets order things differently. So in Ethiopia, they have what's called the Ethiopian CoffeeXchange, that is intended to be a local clearinghouse for the local market, sort of also as a price discovery mechanism. And initially, most of the coffee that was traded had to go through the CoffeeXchange. Now there's changes and updates and requirements that which now offer up different types of producers also opportunities to go not through the exchange, but to directly export out. And this is important because on the exchange, basically, what happens is that you're undermining a little bit the traceability, because in a sense, it's very hard for specific buyers to get exactly the lot of the coffee that they wanted if they have to basically bid on it in an auction, right? And so there's been reforms on that account, and Tanzania has been similar. They also had an auction mechanism where initially a lot of the coffee was traded, but now there's more and more direct exports, because also there's this intention of having more clarity, more clear sales channels, more transparency. Speaking about traceability, one thing that's also noteworthy, and maybe you have experienced this and we can talk about it, is that traceability for mainstream coffee still remains a very large topic. In many cases, up until recently, traceability, so making sure to know where exactly the coffee is coming from, was only really available for niches, so for the specialty or for the certified coffee. But now with this new law, the EU deforestation regulation, this requires that importers know that in the coffee lot that they're importing all of the specific plots of coffee producers. And so now there's been efforts to try to map out a lot of coffee producers and link them to export channels. And this has also been supported by the Ugandan authorities via this national traceability platform, which is trying and now racing sort of against time to sign up a lot of coffee farmers onto the system to be able to give a holistic overview of all of the coffee and also the trading channels and the linkages through the value chain that there are. Finally, and this is my last point, in all of this commercial trading, how is final value distributed? There's a really interesting study that was recently done on the German coffee market to try to understand this. And also I linked to it, I can send you the slides later, which showcases that on the one hand, it was actually quite surprising, or maybe not that surprising, but good to see that if we're talking about the ground coffee, it's still quite like cheap in Germany comparatively. So not many like actors are not making large margins anywhere on this. And sometimes, especially if it's sold at sort of in sales, this coffee is even being considered a so-called loss leader, where the supermarkets are making a loss on the coffee in and of itself in order to get consumers into the store so that they then buy other stuff. We can also point out that a major cost item in the distribution of the value is the German coffee tax, which is quite unique to the country because it's around €1 per pound. That has basically just been around since, for a long time to try to make money for the government off of coffee sales. And there's been big debates around whether this should be reformed or whether this should be abolished, but until now, it's still there. But if we look at different types of coffee products, we can see that the net profit margins are changing. So basically for the producers, it's always the same. It's very tight because they don't really know where their product is going to. But then if we see whole beans, there's already more of a profit margin. And then especially if we look at soft pods or capsules, because in each of the capsules or the pods, there's so little coffee in there and they're being sold so expensively because they're sort of like a price per cup rather than a price per whatever. The profit margins are insane, right? I mean, and it's still a smaller share of the German market, but generally this is where downstream actors, so manufacturers and retailers are making a lot of money. The overview also shows that the final value, especially in some certification schemes, isn't actually that difference. One exception here is fair trade because of the minimum price and the price premium requirement. We do see that if we're looking at the orange part here, this is the costs of the farmers and the net income of the farmer. The costs are almost equivalent, but the net income is a lot higher in the certified coffee than in the whole bean, right? And so a lot of the extra price that the consumer is paying is actually going into the farmer's pockets, which is nice to see. And my final slide, there's also been a very interesting study recently on specialty, and this is where I'll then hand over to Mrs. Mulindwa, that shows that in the American specialty market, which may be a bit different, actually, while prices for producers are higher, so we're talking here about these FOB prices, the free on board prices, Then for the mainstream coffee, so this is comparing mainstream coffee, low-end low-end specialty coffee to then high-end specialty coffee. So this is the really high quality. What is interesting is that as the consumer, the retail price increases, we're actually seeing that especially in the lower end specialty coffee that is like good but not excellent, the share of the price that goes back to the producing country. So this is the comparison between the FOB price and the retail price. In the normal coffee, the mainstream coffee, it's around 23%. This is not the farm gate price, but like the FOB price. So 23% remains in country. In the specialty, these lower end specialty, it's actually less than that. It's 13%, 17%. And even in the highest specialty range, we're only getting 20% of the final consumer price back to the country. So while the producer prices are increasing quite a bit, if we're comparing it to the commercial one, we still see that there's a lot of the added price, the added value that is being captured by other actors, right? And that is not going back to the farmer. And so that's where I'd like to hand over to Mr. Mulindwa to take us a little bit more through the specialty market. And also if there's questions, I'd be happy to answer them. And sorry for taking a bit longer.
So
Yes, thank you so much, Professor Grabs. Thank you
I
so
had
much,
just
Professor
one
Grabs,
question.
for your presentation. Oh, all right.
Yeah.
It's okay, you can come.
So in our discussion, I think there is a point which has just come in regarding USA with the South American coffee from Brazil with these 50% tariffs. How do you talk about that then in terms of the hindrances which have come in for those people exporting to America?
Yeah, so the Trump tariffs are a huge deal, right? So the US, again, it's generally the major consuming market. It's the biggest one besides the European Union. And these tariffs that basically affect all goods are also affecting coffee. And so Brazil is one great example. And my understanding is that because the Brazilian coffee, as we saw, make up such a big proportion of the world supply, Brazil, there's sort of some speculation that Brazilian exporters are sort of pricing in the tariffs in their price. And this is one of the reasons that is making the coffee prices rise again currently. So here, the fact that there's going to be US tariffs on Brazilian coffee is being priced in within the coffee market and is then sort of like sent across the entire world, because it's not just affecting Brazilian coffee anymore, because it's being translated back to the futures market. That's as far as I can understand it, but maybe you have a different or better understanding of the situation.
I think that was also my way of thinking.
Okay, thank you so much, Professor Grabs. It has really been an amazing presentation from your end. To the participants, if at all there is anyone who has questions, we shall have those questions at the end of the second guest speaker's presentation, because we are left with a few minutes. So we'll have to introduce Mr. Vincent Mulindwa, GERUGA Coffee, to present to us his content. Thank you so much. Oh, good.
So there were a number of questions which were set by the lady. I think altogether there were 11, but most of the the issues have been talked about by Professor Grabs, I think, and with that aspect, it may not take too much time to talk about directed trade against the commercial trade. The issue was to differentiate between the two sectors of commercial and the directed trade. Directed trade actually principally we do communicate direct with the farmers in Uganda. And I will focus that mainly on GERUGA as we work. We do import both Arabica and Robusta. And these two types of coffee are coming from different regions of Uganda, whereby Robusta, like Saz has also said, mainly in central Uganda and the western part of Uganda, Bushenyi. There we have built up a chain communication with the farmers direct, whereby we focus mainly on the quality and the cooperation with different organizations, especially women organizations. Coming to Arabica, which comes to the highlands in East Uganda, mainly Mbale and Kapchola, we have organizations which are built up since 2018. And these organizations consisting of different memberships are coming to over some organizations have over 400 women participating in this Arabica farming. So they have joined their hands together to supply us with the small quantities we deliver to Europe. Normally, GERUGA has come to a standard of delivering about 4 containers per year. Compared to commercial traders, that is nothing. But what we do, we have direct farmers, and we can specify our quality which we need. And from that point of view, the farmers also gain the know-how we have achieved here as far as cup testing is concerned and the quality which is deserved here in Germany. This information we transfer direct with our physical presence in Uganda, which we make almost twice a year. We are in Uganda visiting different farms, and this knowledge has been accepted by the organization with whom we work. The problem which we have, which was also mentioned there, which I also asked about, these exchange rates, which differ day to day. But we transfer mainly our cash from here to our Uganda sister company, which is GERUGA Export Limited, the bankers. And this long-term perspective, we can't work with that. We normally target at periods of, let us say, 4 weeks, a month. We fix the price. Within this period, there we take the risks, whether the variation of the shilling against the euro come in question. As a small company or a family company, we can't take these big, long risks, like you said, 3 months and so on. This is speculations which we try to limit with this time limit of, let us say, 4 weeks. So we make a memorandum of understanding with this organization, and the money transfer goes bank to bank. That means we cooperate with these organizations with these contracts limited to a limited time as such. So what we do, since we don't cooperate since we cooperate direct with the farmers, we avoid these brokers who have been taking a lot of the profit what the farmers would take. And through that, we also offer better prices in comparison to big companies like the one you mentioned, Neumann, which is established in Uganda. You go to Mubende area, and the social activities welcome. We are more welcome by those rather than those big companies, because when you hear, I don't want to mention negative things about it, but it is well known what Neumann did in Mubende, they don't think much about the social development of the area. And our philosophy still goes with that area, that it's not only making money, but also to change the livelihoods of our people with whom we work. And through that, we have come to a point of establishing a nursery bed in Mpigi area near Kaweri, not a nursery, but a pilot project whereby we plant. We have started with Robusta because that is central Uganda, and also following those varieties, which is Mr. Sars also mentioned, KR up to 10, KR10 they call it. We get it from Chetunzi. We have some cooperations with whom we work, which supply us with those good quality of Robusta. The target here is to establish a pilot project whereby our outgrowers in the area in Mpigi would come and be informed about what we need here as exporters. This goes to the quality grading direct from Chiboko, FHU, then grading to the different screens which we need. We normally export here screen 18, 15. Below that, normally we don't bring here to our company in Germany. So with that in mind, we are encouraging them to show them how we can grow qualitative coffee using natural manures like dung from Pijare. We have established also one Pijare farm around that area. And with this stuff which comes out of that, show them that we can also work with natural manure or such resources as fertilizers rather than importing these chemical products which normally commercial farmers use. So with that in the mind, we also encourage them to deliver good coffee to us, especially there in that area of Mpigi, where we also want to concentrate much as far as the Robusta is concerned. Going to Arabica area, whereby we are in Capuchola, near Mbale. There, that is where we achieve our Arabica. And these organizations, the women organization with whom we work, have been with us since we started. And they have understood the idea. How do we help them? We help them in such a way that we give them the knowledge, what we have achieved here in Europe, in Germany, what the customer needs and what we need. At the same time, we also pay more than what the commercial buyers do. For us, since we are direct traders, we avoid these brokers, and the money which the brokers may have consumed is transferred directly to those farmers. And we also support some projects which they establish, especially farming machinery, computers, and with that in mind, we have been working with them very, very well. So the other questions have been answered very well. Actually, there was probably one question where one asked the problems which we face. We face problems also with that type of trade with that a type of philosophy, and normally it is attached with this devaluation of the currency. Uganda shilling against foreign currencies is not stable. Today we have this and tomorrow we have that, and that also brings us in problems. For the prices of coffee have risen so high in the last 1 year or 2 years, and that difference we can't just give it back to the consumer high here 1-to-1. So what we do, we find ways of establishing ourselves in selling our product in different channels. We sell raw coffee to people or to companies which have the philosophy of direct trading here. Direct trading is not like a fair trade. I would have also asked that question because there are many companies which use that certificate of fair trade. We tried to avoid that because we saw many data games being played with fair trade. People mentioned that fair trade at the end, what they sell here, when you look at the price they give to farmers in the third world, they are not fair. Probably it's only fair for them here then. So we avoid that. We don't use fair trade, we use direct trade. So yeah, we are direct traders who communicate directly with the farmers. Problems which have come in the last years due to the increase of price, which is very good for the local farmers in Uganda. They are getting more money than before. But that difference, you can't transfer it one-to-one to the end consumer here in Germany. And that is a problem which we have. So we find ways how to compensate that. When you sell raw coffee, that man green beans to the roasters here, the margin is very, very little. It's really it is negligible today. So what we do, we compensate some of those losses which may have come in by roasting and deliver our product to supermarkets here. We already integrated in the regional trading here in Hessen. And at the same time, we do much online business. Now we have introduced also to capture those weaknesses to introduce another product in our supply chain, that is cocoa products. Cocoa is now also a product which is much on demand. Prices have also shot very high in the last 2 years due to Ghana and Ivory Coast weaknesses, who are the best suppliers. And with that, we can compensate at least some of the losses we make in coffee today due to the price variations. So I think that would be also with time when I look at it, we're almost there. And if there are any questions regarding this short presentation, please let us do that.
Yes, thank you so much, Vincent, for your wonderful presentation. I was having a question. Yes, you have talked about direct trading. Yes, but direct trading is more of specialty coffee trading. So let's look at an international buyer coming in to seek or buy coffee from maybe here, like a small coffee cooperative here in Uganda. And what I know, the farmers have different plots of land. And what I know, I think there is a difference in terms of flavor, the flavor profiles. Can that also affect the price? Because what I know, the international buyer can specify, I'm interested in this kind of flavor profiles. Can it also reduce the price of the specialty coffee?
Yeah,
Thank you.
like there was also a point which was mentioned by Professor. Coming together, what we want to say, together we get united, and alone you fall. So with this philosophy, cooperatives, they can be together, like those women groups with whom we work. They can determine their price and make bargaining powers. And that is what is failing in Uganda today. Everybody works individually, and therefore these brokers are given a chance to come in that chain. We are brokers, for instance, in Kampala, you find many brokers who have no idea about coffee. But when you consider what they benefit from coffee business in comparison to the farmer, those are just mountains. And that has to be addressed, probably not politically, but through communities coming together with associations. That is the only way I see together, making cooperatives like in Masaka or Wakai. I think there are many cooperatives are germinating today, according to the information I have. And that should be encouraged. It is also very good what you are doing, that you have established also the knowledge about growing coffee by establishing those nursery beds of K3 up to 7. Is that right?
Yes, and also we have also introduced the new lines, that's 8 and 9, 8, 9, and 10. Now
Yeah.
we are planting those one. That means in about a year,
Mm.
a year and a half, we shall have them ready.
The question
in our
is,
next
why
plan.
did you eliminate KR1 and 2 from your system?
No, yeah, we eliminated KR2 because it is susceptible to the coffee wilt disease. So we decided to remain with KR1, 3 up to 7.
Okay.
Then there's also these new lines.
Yeah. And do you have certificates from UCDA?
We are in the process of certifying. Now it's now Nakori that is certifying the nurseries. And for the information that I have right now is that the Ministry of Agriculture, Animal Industries and Fisheries have now processed some certain booklets, and these booklets will be provided to certified nurseries across the country. So we are in touch with the Nakori team so that we can have them come to our place and get us certified so that we can be able to get those booklets that Maif is talking about, or what they have already that they're going to distribute to the different nurseries across the country. Thank you.
So these grades, the KR1 up to 10, if you come to that extent, what you produce in Ruakai is similar to what the Mukono people are producing, right?
Yes, because now these, for example, the new lines that we also got, we got them from a certified nursery bed from Nakori, that here in Kalisizo, Kalisizo Chotera district. Yeah, so they are certified, they are really good, and we have been multiplying. And of course, what has really got us so excited is that the farmers have really adopted the new lines. They're shifting from the old varieties, and also those clonal to come and plant the drought resistant, and of course the high yielding, and also when you cup the coffee, it's better. So these KR varieties, and farmers have appreciated them, and of course bookings keep on coming. Booking. Yeah, thank you.
Thank you.
Julius, I can see more questions.
Yes, we are having some questions. Johannes, you had a hand up, and also Abias. Yes, Abias, you can come in and share your question with us. Thank you.
Oh, thank you, Julius. Thank you, Julius and Vincent. I'm happy to hear about the GERUGA, and this is really something all farmers can look at and see how best they can grab that opportunity to access that direct trading. I have a simple question here. I would love to know how GERUGA.
I never heard that well.
It's partners and how it would really cooperate
Sorry,
with
Abias, we can hardly understand
the partners that you work with.
Can you maybe post a question in a chat?
Hello?
Can you maybe post a question in a chat? Because we can hardly understand you, unfortunately, due to
am I audible
connectivity.
enough now?
Yes.
Okay. I'm going to send it in the chat.
There's another question also from Joel in the chat.
Yeah, for those who have questions, this is the opportunity. You can raise your hand through that emoji. If you're having issues with poor network connectivity, you can use the message, the chat section to type in your question. You can specify the question, whether it's going to Professor Grabs or it's going to Mr. Vincent. Thank you.
Julius, yeah, there's already one question from Joel in the chat.
Oh, yes, there is a question from Joel. And Joel is saying that it's going to Mr. Vincent. How can one work with GERUGA Coffee? Or maybe how can a farmer, on brackets coffee producer, become one of your suppliers directly?
Okay, good question. GERUGA, the philosophy is to work with cooperatives. We do know in Uganda that most of the peasants or the farmers do not have big plantations of coffee. Mainly when we talk about Robusta, those are farmers with the plantations coming 1 acre, half an acre, and the productivity from that small area is not much for exporters. But when they combine together in trade unions or organizations, women organizations, they make up the volume which we need, and they get the adequate information about quality. And at the end of the day, we have what we want, and they get also the information we need as a group. So individual supply to GERUGA is normally not welcome, because the quality will not be there. Or let me ask you, how big is your farm in that case? What can you produce?
Joel, did you get that? Do you want to
Yes,
answer
Joel.
directly? Joel?
Joel?
Well, yes. Okay. Okay. I thought it was more easier for me to use the chat, but now that I've gotten an opportunity to share my face here, okay, very good. Thank you so much, Mr. Mulindwa. Vincent, my name is Joel Muonge. I am a coffee farmer, and I have about now 10 acres of Robusta coffee, with plans to scale up with Arabica coffees. And I am not interested in of the value chain coffee. I literally want to concentrate. I'm an agronomist by profession. I did agriculture science, and I want to put all my mega emphasis in production to maybe green bean level. And I am now looking at partnering or working together with potential direct traders. Let's say now like GERUGA Coffee is here, or Exporters Limited is here. How do I become part of you? How do you work together? Is there a window for me to join you as an individual farmer? Do I necessarily have to first join a farming cooperative, or else? Do you have specific regions in which you are operating? Because, for example, I operate in 2 regions. I operate in Uganda region in the central, Luwero, Nakasongola area. I also operate in Toro region, that is the western part of Uganda, in Chendiga district specifically. And yes, there are other potential suppliers, but that is also dependent on the window being open by GERUGA to, or any other direct trader you maybe would recommend for us to make a business together. Yes. So that is just my inquiry. Thank you.
Okay, good question. When you talk about 10 acres, This means you are really a big farmer as far as Ugandan production in Arabica. But what surprises me is that you produce, you mentioned which part in Mubende or? But because you talked about Arabica.
No, I mentioned about the two varieties.
Yeah.
The Arabica has just been established and it is not yet at the production stage. The only coffee I have ready for in the production stage is the Robusta coffees, and we've now scaled to 10 acres. That is in Chengege district.
Okay, that is different thing. So Arabica, you are already there. That means you have the volume, which may be of some importance for exporters like a GERUGA, right? Hello.
Yes. Yes. Sorry, I mute when I conclude speaking. Sorry.
So that
Yes.
means you have the volumes which you may be. What capacity do you produce as far as parchments are concerned before you grade them?
My pro
Yeah, he has gone off.
Yeah, the connection
my,
drive.
my production capacity is about 13 tons of green bean per season.
Green beans, what do you mean? Already graded?
No, ungraded. FAQ.
FAQ.
You are talking about Robusta now.
Yes, I'm talking about
Yes.
Robusta.
That
Fine
is,
Robustas, because my latest cap score is about 82.
yeah. But what makes you work alone? Don't you have outgrowers around the area with whom you can cooperate?
Well, no, I wouldn't choose to work alone. If there was an opportunity for me to work with fellows, that would be a great opportunity that I would really love to jump on or even initiate. But I and cooperatives have had a literally struggling record for the past. If you are to list 10, if you're tasked to list 10 functional farmers cooperatives in Uganda today, you would struggle because of the individual differences, in terms of interest, in terms of production,
Okay, I
in
have
terms of
understood. It is not your
thoughts.
test. I've understood. How have you been doing it now? How do you make your?
Actually, I have a young garden, and I'll be launching my first major coffee harvest in November this year as my first coffee harvest. But I am utilizing all this time to explore all opportunities available to see if I can have a team I can work along with. I had already identified a bigger fellow who is literally 100 times more than my production capacity and potential. And we continue to also identify more other interested parties because this is the coffee business is a deal of those who are interested, not whoever has the plant. And in my production area, you realize that it's literally complex for you to find a farmer who has more than 1.5 acres or 2 acres.
That's why
Yeah.
I say that is why that is according to our experience. Those people come together, 1 acre, half an acre, and at the end they get the adequate information. They are educated about quality together as groups, and even for us as the direct traders, it is a better guarantee if we are to make a memorandum of understanding with such groups rather than with an individual, because something can happen to you as an individual, but for a group, it is in better security to work with such a philosophy of being together. But nevertheless, if you have the magnitude and you are sure of producing good quality and you determine to be a coffee farmer in that case, your correspondence may be interesting for us, that we probably share ideas and find ways how we can work together in terms of coffee, which is now starting with the Robusta, according to your information, right? So later on, we can share addresses.
Yeah, that is okay.
Yes.
Probably you know
Contact
now
details
how
will be shared in the aftermath of this session.
work, and then we see a way forward together. Okay?
Okay. That's good. Thank you.
Yes, Mr. Vincent, there is also another question from Abias. Actually, Abias has 3 questions.
Yeah.
The first question is, how GERUGA identifies and partners with cooperatives and farmers in Uganda? Please share how GERUGA identifies and partners with cooperatives and farmer groups in Uganda. That's the first question. The second question is, what kind of support do you offer in areas of quality, certification, and lastly, how do you ensure transparency and fairness in pricing within this direct trade model? Oh, there's also another question from him. How does GERUGA integrate the 3 components, sustainability, climate resilience, youth and women inclusion in your social and economic partnership in Uganda? Actually, there are 4 questions.
Yeah. Regarding ESMA with this certification, today we talk about bio, we talk of organic coffee, and this system of getting the certificate of organic coffee in Uganda is very, very complicated. It is probably Professor Grabs. I wanted also to ask her about that, about certification, but it will come later. And certification in that case would be this organic coffee certification, but the process takes really much money and much time. But what we do know that most of the Ugandan farmers don't use chemicals. They are already certified, but theoretically they don't have certificates. So when you look at the coffee from Uganda, Arabica in that case, and you compare it with Brazil, where you see them with machines spraying everywhere, Uganda is not the case. But unfortunately, paperwork is also needed to confirm to the buyer X that you are organic. For instance, we have also organic. We don't have an organic certificate as such as a GERUGA, but we buy organic coffee and we are allowed also to market it here in Europe, but not under GERUGA as certified bio importer. But what we are certified in bio is in roasting products. There we are already certified here in Germany as product producers of bio, and when you go also to our online, you will find bio, we call it bio, that is organic products of coffee, which we produce under that umbrella. But getting a certificate in Uganda is difficult. So integrating the women to men, we have found it in coffee industry in Uganda, especially in the production sector, that working with the women is really a very big value addition. I don't underestimate men, but we have found if it comes to sorting coffee, they take time. At the end, what they do is quality. Men, according to our experience, men are only involved in coffee production, especially in the grading. The outcome are not so good compared to ladies. So there, in that case, with organization, we prefer organizations with the bigger capacity of women. That is our philosophy and the experience which we have achieved. Yeah. but does not mean we are against men. Men, they are work to do in the field and so on. But during the final stages, even picking, when you are picking these red chilies, women really take their time. Men market so because they are just commercial oriented, and the quality which comes out are normally not the best. That is our experience which I've got, and we have been following that physically on the ground, and but working together, integrating them is okay. We do that, and we also support communities where we operate. We buy seedlings, for instance, we have an organization in Mpigi, whereby we distributed over 4,000 seedlings to farmers to plant them with that ideology of KR10. Yeah. And now they are producing, now they are about 1.5 years, and they are happy. And such organization, outside the other machinery, interference, education, and so on, schools, which we also give some part of our gain here, plus the good price we offer in comparison to the big ones, because we look for quality, and the big ones like Neumann and so on, sorry, their philosophy is different. So there was also another question here, I think, which I have forgotten. I think the first.
I have a question, if I may, to Professor Grabs before I think you need to leave soon. We are a little bit over our time.
Yeah.
Just because at the end of your presentation, you had like a slide sharing displaying the percentage of the value distribution, like the commodity traded coffee versus the specialty coffee. And did I get it right that with the specialty coffee, like the percentage of the value distribution is higher that ends up in the recipient country than compared to the commodity traded coffee?
Wait, I'll share you the slide again. It's actually the opposite. So this is really interesting. I would recommend you to read the study. I can also send it around. So here what they're looking at is, again, sort of the share of what the FOB price is compared to the retail price, right? And so this here is the commercial coffee, where it's low recipient, like it's rather low price for the producer and also rather low price for the consumer, but the total share is around a quarter. And what they're finding is that while the price does increase for the specialty at the producing country end, it's increasing so much more on the retail end that the share of the overall consumer value is lower in specialty than in the commercial. So like technically the farmers, if they were to get the same share of the value as in the commercial, so like a quarter of the final sales price, they should be getting more money than what they're getting right now in the specialty sector. And especially this is especially at sort of like the low end specialty. And so the idea or the intuition basically is that there's a lot of money being made on marketing, right? And like the value addition in the specialty and the branding, that a lot of this value, the additional dollars that the consumers are paying is ending up more in the roasters or like the retail end rather than all of that additional money going back to the farmer.
Okay, all right, thanks.
I think we do not. I don't know if there are at all any available questions. We can use the remaining 2 minutes before we switch the microphone to our instructors. Just 2 minutes. If at all there is any other question, if at all there are no any questions, we can go to the next item on the agenda, the final remarks.
Mine is not a question, but it's just an inquiry.
Okay.
With with Mr. Mulindwa on how we are getting in touch to share contacts because I would really love to have a one-on-one conversation with you.
I will share the contacts in the aftermath of the session in the group.
Oh,
Yeah.
very good. Okay.
I think it will also be good for Professor Grabs to also share her contact details if at all there is anyone that has any information, some
Yes,
certain
yes.
queries. Maybe you can send an email. Yeah, she'll get back to you.
That's okay.
Yes, and
Yeah.
if you share the slides, some
Okay.
reports that might be interesting to you as well. Maybe I can share it also with Johannes, and then he can share it with everybody else.
Okay.
A question here to
Yes,
Professor.
please.
Do you
Yes,
have
Vincent, you can hear
some
me?
minutes here? The question is, your presentation was very, very professional, like one expects, and thank you very much for that. Now, my question is, can you distribute this to us, or it is just a secret?
I'd be happy to distribute it. So yes, I can also share it. Maybe I share it in the email that we had as the organizers of the session, and then you also get it as well as the hosts, and then it can be shared along.
Thank you very much.
Thanks.
Yes, so I think let us use this opportunity to thank so much. Oh, Vincent, there's
One more
something?
question, please. It is slightly, if you just 1 minute. Professor Grabs, I don't know whether you are also you are also attached with the certification of AUDR.
Mm-hmm.
It is difficult for us now when the deadline for companies like GERUGA will be next year, June.
Mm-hmm.
And we are looking for providers who can link us to this online registration.
In the due diligence platform.
Yeah.
Yes. Wait, let me look it up because I know that there are some resources, especially for smaller and medium-sized enterprises, that sort of talk you through, because my understanding is that you don't need, like, you can access it yourself directly, like especially if you're the operator, if you're clearing customs, then you need to actually access the website directly. My understanding is that it's already available for first testing, but let me look it up, and I can also send that in that same email where would be a good resource to get started on that.
Yeah, because now our idea is to be able to be in touch with our outgrowers, and we identify their farms and take data which are relevant. It is this certification.
One question, are you a member of the Deutscher Kaffeeverband, the DKB? Because I know that, so the German Coffee Association, they have a tool. I don't know, like, and I think my understanding is that it's free for members as well, which kind of walks you through the process of creating a due diligence statement. So I can also maybe send you some information on that.
Please do that. Please do that.
Okay, Julius, you're up.
Yes, thank you so much. Our guest speakers, Professor Grabs, thank you so much. Mr. Vincent, thank you so much for creating time. Share your expertise knowledge in commercial trading specialty coffee. It's a one lifetime opportunity. We'd like also to thank Sholema Steve Tong. Thank you so much for coordinating this, and also Unifa. Thank you so much. But I wanted to use this opportunity to introduce our instructors. If at all there is anything that I would love to share. Samuel, something you can share from your end? our instructor from Uganda, and also we can have Johannes coming for anything to share with us so that we can be able to close the meeting. Thank you so much.
Thank you so much, Julius and participants, for your wonderful time, but also the guest speakers, Professor Grabs and Mr. Mulindwa. Thank you so much for the presentations. I was also a learner in your presentations. I was speaking information for the future markets and contracts. It was my first time to sit into your class, and I'm delighted to learn this from our program. And I know all participants have really got insights into this. And yeah, we are here to exchange. We are here to learn about the coffee business that we are already doing in Uganda, but we want to break the barriers and understand it more to the extent that we do business with on the European level. So that's why we are looking forward for your guidance, for your information. So I'm really delighted to be part of this. Mine is to appreciate your time. Thank you so much.
Thank you so much, Samuel, for those wonderful regards. Hartman, anything from your end?
Okay. Julius, thank you so much for, moderating this, and it has been a wonderful one. As Samuel said, yes, we're all learning. As for me, I'm not a coffee farmer, but it has been a wonderful one. Have at least picked something that I'll take back home, and I believe all the participants as well has taken out something. So thank you so much, and thank you for everything.
Thank you so much, Hartman, for those regards. The microphone is to you, Johannes.
Thank you, Julius, for guiding us through this session, and thank you also your partner Elovina for preparing. And I really appreciate Professor Grabs and Mr. Mulindwa to join our first session of this series. So it was kind of a trial run. Thank you for being with us here, sharing your expertise. Yeah, I learned a lot in this session, and I hope our participants did as well. And also I really enjoyed like how this discussions came up, and now like conversations about like probably starting to start a joint venture and sorting out options. So we shall stay in touch because we know each other now, and we shall inform you about what's happening with our journey, especially with the final event where we're going to invite everyone. It's going to be happening in March 2026, where our tandems, so the Ugandan and German participants together, worked on some kind of business proposal for related to coffee trading. We'll present the results, and this will mark the final event of our CoffeeXchange program. So we'll be happy if you would join us there as well, because you accompanied us on our path. So thank you so much, and thank you all for participating. And hope to see you guys soon. All the best.
Thanks very much
Yes,
for that.
thank
Thank you very much.
Presentation.
Yes.